Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week we're talking about new top 5 sectors. I prefer to say 5 top new sectors. But joining me, as always, to clarify it for us, Zacks Maestro of Stock Screens and head of the Research Wizard Division at Zacks, Kevin Matris. So we'll go with your headline, new top 5 sectors. They do look like new leaders,
yes,
as I peruse the list, but why is it now important to identify these new top sectors?
Well, first off, it's always important to identify what the top sectors are because roughly half of a stock's price movement can be directly attributed to the group that it's in. And by definition, a strong sector or a strong industry means that you're going to have more of its companies moving higher. And that is how you're able to identify whether or not a group is strong or weak. Obviously, if you have a bunch of stocks moving in the opposite direction, going down, there's no way that can be considered a strong sector or a strong industry. But again, I think what's interesting is that I've done some testing in the past, and I have found that by even getting into just a good stock or a mediocre stock in one of the best industries will oftentimes outperform one of the best stocks in a troubled group. So I think it's really, really important that you find which stocks are firing off the best and which stocks are really doing the best at any given point in time.
Makes sense. So how then are you defining best sectors?
Well, there are several ways that you can define what the best group or what the best industry is. My favorite way to look at it is by looking at the percentage of stocks trading within 10% of their 52-week high. Now, a lot of people like looking at the percentage price change over 12 weeks or 24 weeks in order to determine which sectors are doing the best, but I don't think that is sensitive enough. And as an example, check it out. If you were to look at oil and energy, for instance, if you look at it based on its 24-week or its 12-week price performance, it's one of the top sectors. But then if you were to look at it based on just the last 4 weeks, it's one of the worst performing sectors. And the thing is, if you were to look at its 12-week or 24-week price performance, the reason why this does not reflect how poorly it's been doing is if you have had a huge run-up that preceded it, and then you had a big pullback, a lot of times that pullback is simply going to get lost within that big run-up that preceded it. Mm-hmm. But if you're looking at the percentage of stocks trading within 10% of a 52-week high, a simple 10% pullback is going to be reflected right away. And if you see a bunch of stocks pulling back from their highs, greater than 10% from their highs, that is absolutely going to be reflected in the group. And you can kind of surmise that maybe something systemic is happening to that group as opposed to something being just specifically attributed to a stock. So I think it's a very sensitive measure, and I want to look at the number of companies or the percentage of companies trading within 10% of the 52-week high. I think that's one of the best ways to look at it.
All right, don't keep us in suspense any longer. What are the new top 5 sectors?
Very interesting picks. The top 5 sectors based on the percentage of stocks at or within 10% of their 52-week highs, we've got it right up here, is number 1, finance. 21% of the companies in the finance sector are trading within 10% of the 52-week highs. You also have aerospace coming in at the second position, 19%. Then you have retail, wholesale, 17%. And then the fourth and the fifth, it's really a tie. You've got consumer staples and construction coming in at 16%. The reason why I think these are interesting is because a lot of people had been kind of discounting retail. Everybody's worried about the economy and spending. But it's interesting to see some of these companies, consumer staples, retail, and even construction, come in as some of the top performing sectors. So I think it's really important to start paying attention to these right now.
All right. And an example of a stock from the top sector, which is finance.
Yeah. First off, in the written article, I go over ways that you can identify the top stocks within the top sectors. But for right now, finance is the top group. One of the companies that we're looking at is a company called American Financial Group, ticker symbol AFG. They're a holding company which is primarily involved in insurance, like automobile, property and casualty, and this kind of thing. They have a Zacks rank of a 1, which is a strong buy. They have very attractive valuations. So you've got a very low PE of 7.19, very low PEG of 0.94, and a very low price to sales ratio of 0.80. And as of Monday, which was yesterday, which is September 8th, they were trading at $29.78, just 2% off of its 52-week low. And if you look at a chart, or a 52-week high, excuse me, thanks, Terry. And if you look at a chart, you can see that it's trading above all of its moving averages. It's trading above its short-term moving average, its longer-term moving averages, and you can see it's very close to being able to break through a key resistance area. So it looks very good.
So do you or does anyone in your household own that stock?
I do not have AFG.
All right. You can read all about this week's screen that Kevin has talked about here and see some more stocks that came through it by linking to it off of our homepage, Zacks.com. The key to successful screening? Well, that lies in discovering those screens that have produced profitable results in the past. And Kevin uses Zacks' powerful Research Wizard stock screening, backtesting, and reporting software program to do just that, to achieve all of the screens that he talks about here on Screen of the Week. You can learn more about the Research Wizard by going to Zacks.com/Research Wizard. With the maestro, Kevin Matris, I'm Terry Ruffalo.